Meta just grew 33% year on year. However, the stock dropped 7% on the day, and investors weren't happy with the report. Today, I'm going to be going through the earnings report and tell you why I think this is all a overreaction from investors. Now, let's go ahead and look at their earnings report and see what the figures are. Obviously, as I mentioned before, their revenue was 33% and their costs and expenses grew 35%. Now, this would be a immediate red flag to investors because it shows that the actual cost of the business is increasing faster than the company itself. Their income from operations was strong at 30% growth, and their operating margins stood still at 41%. Now, their provisions for income tax was actually plus $5 billion. And to explain why this number is positive, in simple terms, without going into too much detail, let's say your income tax went up last year. However, this year the government felt as though the amount of tax that you paid was too much. And so they're basically given a tax refund to a lot of big companies like Meta and Amazon. And that number is actually $8 billion. And if we come down to net income and their EPS, the growth seems very high at 61%. Now, this wasn't because the company was insane and grew a massive amount. This is obviously just due to the tax relief that they got paid. And if we look at the actual table, I've got a table up here. We can see here that without the tax break, their real growth was 13% for net income and 14% for EPS. So if you take a look at the earnings report, there are a few more interesting figures that we can go through. Their daily active users for the platform saw an increase of 4% year on year. However, there was a slight decrease quarter by quarter. Now, they say that this was because of the internet disruptions in Iran, as well as the restrictions to WhatsApp in Russia. Now, firstly, WhatsApp is not a concern because WhatsApp does not generate as much revenue as some of the other platforms that they have. However, given that the disruptions in Iran would have caused significant amount of people to lose internet access, it would make sense for them to see a decrease. And this also wouldn't be a massive cause for concern for Meta as their target audience is mainly focused on Europe and America. If you take a look at their revenues by geographic location, we can see here that US and Canada make up the large proportion, and Europe second, with the Asia Pacific region in third place. And so again, I don't think this would be a massive issue for Meta. Now, if we come down here to the report, this was the big reason as to why the stock dropped 7% on the day. We can see here that they say that we anticipate 2026 capital expenditures, including principal payments of financial leases, to be in the range of 125 to 145 billion, increase from our prior range of 115 to 135 billion. This reflects our expectations for higher component pricing this year, and to a lesser extent, additional data center costs to support future year capacity. Now, let's first understand what this capex is actually going into for the company. Meta's capex for this year is heavily targeted on AI and using AI to basically leverage their products to increase engagement and increase ad revenue. Now, in that sense, this revenue stream is very uncertain. It's very much an if. If they can do this, then their revenue will go up. Whereas if you look at a lot of other companies like Amazon and Google, they have demand for their products and they have customers waiting and they have a whole backlog of supply that needs to be met. Whereas that's not the case with Meta. Meta are using all of this money in-house and investors aren't certain whether they will actually get this money back. With the uncertainty in the war in Iran, this number that they have predicted for capex, there's no certainty that it will actually stay the same. And so if it's already gone up in the first quarter, there is a chance that it could go up again. And that again has brought uncertainty into the market and caused the stock to drop. Now, Meta don't get a good rep when it comes to capex, because if you remember back to the whole metaverse, where Mark Zuckerberg had the idea that the whole world would move ahead into the metaverse, Investors weren't too certain on his idea, and if you look back then, the stock dropped again during that time. And we can see here that there is again a lack of trust between the company and investors in whether this whole AI play will actually work out for the company. Now, Meta is a $1.5 trillion company, and half the population uses their products. Now, they aren't just spending all this money on AI for no reason. So, Meta makes money by selling ads, and advertisers will pay top dollar for these ads if they actually work. And what Meta is trying to do is they're trying to essentially make the advertiser more money, which means that in turn they can increase their prices, which in the end they can make more money back and cover the cost of capex. Now, we know that this is already working because Meta's ad revenue has just beaten Google's, and it's growing twice as fast than Google. And back to their earnings report, we can see here that their ad impressions across their family of apps increased 19% year on year, whereas the average price per ad increased by 12% year on year. So they're already doing what they promised. Now, Meta is also using this capex to build the ultimate discovery engine. And with better AI, it means better algorithms. And with better algorithms, it means that users will stay on the app for longer. And when this happens, this means that they can show you more ads. And we already know that this is working because there was a meme going on recently about how addictive Instagram Reels were.
Reese, look at it. Oh my god.
Meta is also investing heavily into WhatsApp. WhatsApp currently has 3 billion active monthly users. And what they're trying to do is to essentially have smart AI assistants for businesses where they can book appointments, make orders, and get customer support straight from WhatsApp. Meta also want to own the hardware. Previously, they've always been run on either Google or Apple. And in the past, they've previously been burnt by Apple when they've changed their privacy settings, which costed the company billions. And that's a type of risk that Zuckerberg wants to offset. Meta is investing heavily into the AI glasses. They want to create the next iPhone and they want their product run on their hardware and their operating system. And this is why I think Meta dropping 7% on the day is over exaggerated. They are the fastest growing Mag 7 stock out there. And it looks like that they're just trying to capitalize on what AI can do for the future.